trading. David Buik from BGC Partners joins us now live from the company's offices in London. David, great to speak to you as always.
Hi, Francine. Good to see you.
The markets aren't doing great. I mean, they're concerned about the economic data. We also have traders talking about a crash. Where do you stand on this?
I'm not there for a crash, frankly. I mean, Manus and John have summed the market up and its performance brilliantly. I think the reason why the FTSE hasn't fallen as much is you're comparing an index with 100 stocks, which is very internationally based, probably 70%, and also saw BP fall the month before last substantially, which was a major constituent stock, and also the fact that the CAC 40's got 40 and the DAX has only got 30 stocks. So I think that's the main reason why. I still think that, and I understand the reason why investors have, for want of a vulgar expression, spat in the face of a tsunami of appalling economic data, which should send everybody to the hills. But the fact remains is that we've got a serious level of decent dividends and yields on many of these stocks. And because they've taken the opportunity in the last 2 years to repair their balance sheets and also to get themselves in good nick, cut their costs, and know exactly what they're doing, and providing there is some sort of import-export slant on their business, I don't think there's any major reason for deserting stocks at the moment. We have in the case... Sorry.
What about the US? I mean, we're seeing some very difficult economic data. Does Europe, is it strong enough to sustain a double dip in the US?
Well, we've seen the P ratio for the S&P 500 in the last year come down from 23 times earning to 15. So in isolation, those stocks are cheap. But as you so rightly say or surmise, there are 500 of them. I think we cannot expect the housing market to repair itself until unemployment stops going up. And again, I think we're going to get dispiriting figures on Friday in non-farm payrolls, even though we're expecting perhaps as much as 42,000 jobs in the private sector to be created. It's still possible that the net loss will be 100,000. That cannot go on at that level because obviously things like consumer confidence, which we're going to hear about today, and ISM manufacturing data later in the week is not going to be particularly encouraging. Again, I think it's caused a question of selection of stock. And really, until such time in Europe as we know exactly how brutal the austerity measures are for some of the countries like the United Kingdom and Germany. I mean, Germany yesterday, a big part of consumer confidence, brilliant execution of what they're doing in terms of exports. It's not just like turning the tap off. And then when you get wonderful figures like India of 8.8% GDP, and hopefully China is playing a cat and mouse game with us all, that may be just enough to sustain us going into a serious recession.
David, very quickly, do we just need a little bit of reassurance from the governments that they're actually ready to put a second stimulus on the table if we need it?
Yes, I think so. I think Mr. Trichet has more or less indicated at Jackson Hole later that he was almost thinking about taking the money off the table in his dreams. The fact remains that the Mediterranean countries are in such bad shape. Germany and France are incapable of holding things up. And in the UK, I'm certain that the Governor of the Bank of England, Mervyn King, and his colleagues, if they need more stimulus in 3 months, they'll give it.
David, a pleasure to speak to you as always.